Hi, this is Kerry Artek with Wicked Signal bringing you another video analysis. This one on Amazon.com, symbol AMZ. I did record this video on Sunday, February 28th, 2021. Before I jump into the stock itself, just as usual, I'd like to remind you to please tell your trader and investor friends about wickedsignal.com. Have them go to the website, click on the free subscription link, the free part of the website, if you fill out your first name, last name, email address, you or they will receive a new email each and every time a new video is available for viewing. I won't, fill your inbox with all kinds of marketing offers, and I will not share your personal contact information with anyone outside of the organization. I don't really have to say much about Amazon because it's such a widely known stock. You probably know more about it than I do. But I'll just, remind you that it's one of the big five companies, technology companies, along with Google, Apple, Microsoft, and Facebook. It was founded in '94. Jeff Bezos, Seattle area, so forth and so on. Started out with books, and now it's one of the largest e-commerce retailers. Is actually the largest e-commerce retailer in the world, bar none. And that's really all I'm going to say about Amazon. I would like to jump into the chart a little bit. This is really technical analysis, and I'm going to be providing you some support here in a moment that is actually well below the market. It's more in preparation for the possibility of a downdraft. We have I'll get to that in a moment here. Let's take a look at the chart itself over the last 14, 15 years. And really sort of, I'm going to give you the rotational sequences here, the big ones. After we rallied off that 1415 low area, the 2018 high was 2050. We backed off to 1307 the same year. And we got kind of locked into a consolidated framework for a couple of years. The COVID low was 1626, and we've more than doubled over that price, or we had at one point up to 35.52 last August, and we backed off to 28.71 last September, and we've been inside that range ever since, consolidating in a pretty wide two-sided framework. I'm going to zoom in a little bit, take a look at the red square here. We'll zoom in on that chart, and you can see that there is actually a former ascending channel top that's of note. I mean, this is actually a meaningful long-term support, and it comes in. I'm giving you 8 weeks because this formation really won't change. It can't be disturbed. It is a former channel top, so it's at 2750.33 this week, the week of March 1st, and it rises to 2793.40 the week of April 26th. That is 8 full weeks later. You can subtract that out, divide by 8, and you'll have the exact location of that channel top each and every week all the way through April. This is our base of support that if tested, yes, we're 10% away from it. But last week was a big sell-off. I think we actually gapped lower. And so it's one of the reasons I'm shooting this video is just to sort of prepare you. Where do you stick your neck out if you want to buy Amazon? I'm not crazy about buying it in this vicinity. You can also see here an intersection of two channel formations. This is a descending channel bottom that is at 2747.37 the week of March 1st, and that drops to 2704.38 the week of April 26th. So a lot going on in that 2700 handle, as I'll call it. Obviously it changes each and every week. So that descending channel bottom that I just drew, once again, you can subtract those two numbers out, subtract 2704.38 from 2747.37, divide by 8, and you'll know where the channel bottom is. This is an area of support that can absorb selling really through 2021. I don't know if we're going to test it or not. I just think it's worth noting. I think it's worth presenting to you as an area that if Amazon drops another 10% over the next few weeks, this is a zone to be prepared for, to buy into, in my opinion. Because from here, as I say, we can bottom out not only into mid-year, but even through the rest of the year. And from here, the market can consolidate, turn higher, and move on to new highs within a matter of, I'm guessing here, 3 to 5 months, perhaps the better part of a year. If we zoom in a little bit more, I can sort of show you some important areas. For instance, that 28.71 low from last September, that's an obvious stick your neck out point for buying for some people. I'm not crazy about buying former lows unless you're, kind of a short-term day trader or swing trader, but as far as that actually being able to contain selling pressures, say into the second quarter, through the second quarter, I think you need to be careful. I do think it's worth waiting for either buying weakness in Amazon right now in that 2,700 area, which you can see here also re-illustrated, those channel structures that are intersecting. That is the buy zone. Or you could buy strength. Now, I will be keeping up on this stock. And I'll be watching it for a buy signal. For instance, the high settlement, as you can see on this chart, from back in August is 3401.80. That is the high weekly close, I should say. And you can see how the market has spiked through it a number of times, not closed above it. Each and every time it spiked, it fell back. So yes, we have a sign of at least stability above 3401.80 with a weekly settlement. And there is, I could see the possibility that over the next few weeks, possibly by the end of March, the market could come back and close above that. I don't have an indication of that. I'm just saying I don't think it takes much to imagine the possibility that the bars could begin to creep upward and actually test, maybe settle above that 3401.8 high. And if that were to occur, if we were to move up from here and not continue south, then we have, for instance, and this is something I would be watching, a rising channel top that would become kind of a 2 to 3 week objective if we settled above 3401.80. And that's at 3646.88, rises to 3707.13 full 8 weeks later. Now, I'm a little reluctant to put that upper level out there for you because, it's prone to change. All we have to do is break to a new low, and that formation has to be reconstructed. I'm just giving you kind of a scenario that if it were to unfold, that is the area in the 3,700 area presently that can absorb buying on a quarterly basis. And it is the area that, if settled above, would indicate bullish continuation, for real. Like I looked at the charts and I have around 4,500 to 4,600 as an objective if we settled above that top channel top. But I'm going to be watching the stock closely over the coming weeks. If we get above 3401.80 at the end of any week, I will shoot a new video and put it out pronto so that you can see where that structure is in the 3,700 handle, because it would become a quick target, and it is an area that can contain quarterly buying pressures, and it's a significant upside continuation point into later year. But until then, I'll just leave you with this chart, which is the real purpose of this video, which is to say you have a you have an intersection rather of two meaningful channel formations in the 2,700 area that begins at, well, it varies as you can see, but it's anywhere between 2704.38 as a low and 2793.4 as a high, and it is a zone that you can buy into, in my opinion, if you're looking to find a good spot to buy Amazon as not only a good trade that could last several weeks to several months, which really is the focus of Wicked Signal, but this is an area that you could be bought really through the rest of the year. So yeah, you could take your 2 to 3 week, 2 to 3 month profit. If we test this lower area, by the way, just know that I'll be also shooting a new video on Amazon pretty quickly to give you the heads up as to where you may take profits to the upside, where we'll find the next notable resistance. But I think it's worth just leaving you with this image, because this is the area that, if tested over the coming weeks, can absorb selling through the rest of the year for Amazon.com. And that is really all that needs to be said for this particular Wicked Signal video.